Hi everyone, today let's talk about the government shutdown, then we'll get into the data, then we'll get into the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the first test of the speaker here is keeping the government open. I was already concerned that they weren't going to be able to do this because it did take them so long to get a new speaker, which was really cutting into the 45-day stopgap, which was arranged by the previous speaker right before he was ousted. And now they have a very tight timeline to make sure that the government stays open. And it doesn't seem like that's going to happen, in my opinion. And if we do see a government shutdown, that could have some effects on the economy as well as the markets. And here it says they have a two-step ladder in continuing to fund the government until January 19th. I guess we're just going to continue to do these very short duration bills to keep the government open while we figure out what we're going to do. And that definitely is alluding to the Moody's announcement that they have some concerns for the US economy, and some of those were based on the government. We talked about that in the weekend video, and this seems to be solidifying the fact that there is some difficulties within the government. We've been seeing this for a while here, but this is another example. And then you have Democrats coming out and saying that the continuing resolution is driven by irresponsible conservative House Freedom Caucus, which is always a little bit concerning considering the fact that the government continues to spend money like drunken sailors with no concern for debt limits, inflation, or the new rates that they are starting to borrow money at. Very, very high rates. We're seeing weak bond auctions as another indicator that the government is struggling to borrow money, and yet we continue to spend money basically as fast as we possibly can on anything that seems to be relevant. In terms of what is in the bill, they say it's going to fund the FDA, the military, construction projects, veterans benefits, transportation, housing, urban development, agriculture, energy, and water programs. So basically everything they already agree on. Moving over to the economic calendar, there was basically nothing on there for today, just like we talked about on the Friday video. But tomorrow is a big day. We have headline and core CPI at 8:30. That's definitely going to move markets. We also have Eurozone GDP, fairly interesting. And then on Wednesday, it does not slow down. We have PPI at 8:30. And retail sales at 8:30 as well. And then the Atlanta Fed GDP numbers for the US, always interesting, but lots of inflation data coming out over the next 2 days. So be aware of that for your short-term positions. Moving over to Max Payne, you can see it's still sitting at 430, very concerning. $10 higher on a week where there are so many options in the market does tend to speak to weakness. Of course, the inflation data that we just talked about is going to drive market direction. Highest call strike 440. We continue to talk about that being a call wall. It's not nearly as strong as some of these put walls, but 430 does seem to be the magnet. Somewhere between 430 and 435 does make sense for the end of the week. And when there's so many options, just like we talked about, you do have to factor in Max Payne much more into your trading decisions. Moving over to the charts, starting off with the S&Ps here, we ended up closing above my 440 level. I do have it just 2 cents below here, but we closed above 440, which is interesting. On the S&P chart, you can see we hit that trend line again. We touched it on Friday. We touched it here again on Monday. We got a doji, inside candle, does not look great. We already talked about how we were topping out here on momentum. Got a step down on Thursday, one more big rally on Friday. That might have been the top here. Tested that same level here today and got a step down on daily momentum. That is not great if you are a bull. And we've been talking about a pullback for a while. Maybe inflation data is the catalyst for that bigger pullback. I still think that 430 area makes sense. You got VWAP and the 21 EMA sitting in that same zone, right in that 430 area, as well as trend support in the 200 SMA on the daily chart. Everything makes sense to at least get into that zone, test it, and then potentially rally for a Santa Claus rally into the end of the year. That would also complete this kind of head and shoulders that we're looking at with a left shoulder, head, right shoulder, and then a rally through. Would give you a nice bullish push into the end of the year, in my opinion. Moving over to the NASDAQ, very similar thesis. Doji candle, inside candle, lower high. Still holding above 376.45. If that level breaks, you're looking at the 55 EMA down at 374.27. Momentum bearish, RSI weakening. Again, on momentum, you got to step down just like the SPY. Everything is pointing to a little bit of a pullback. You can also argue that we're just sitting still here waiting for that inflation data. And then if inflation does come in a little little bit lower than expectations. Maybe we see a bit of a continuation rally. That could be interesting. But right now, everything is pointing to an exhaustion in momentum to the upside. Moving over to the Russell and the Dow, staying on the daily chart here, look at these candles on the Russell. Basically identical candles, slightly higher low on this wick, but otherwise basically the same. Very interesting. Tested that level, ended up holding, held the 21 EMA, rallied up a little bit from there. It's up a little bit after hours, which is interesting, showing a little bit of strength on the Russell. Dow, bullish candle, got above my level, also interesting. 345.24 to the upside as a potential level after this one. But again, similar profile on momentum, step down, one-day rally, step down on momentum. RSI still looks okay, volume weak on this Monday. Definitely interesting, waiting to see what happens with inflation data tomorrow. Moving over to the equal weighted S&Ps, I just wanted to highlight that it was another inside candle off a bullish candle, same profile. This actually looks a little bit more bearish than the Russell, more similar to the SPY. Inside candle, still above 140.24. If this breaks and the 9 EMA breaks, then we're looking for that 21 and VWAP. It is interesting also to see VWAP stepping down despite the candle being basically flat. Typically when you're confirming direction, VWAP is moving in the direction of price like we're seeing here on this down move. Now we have VWAP turning down while price is still to the upside, which is not what you would want to see if you were a bull. Moving over to Apple and Tesla, I have Apple here on the daily chart. You can see we did get a step down on daily momentum. That is the first move towards bearish that we've seen going back to 30 October. So that's fairly significant, especially on this massive rally that we've seen. 186.81 is your resistance level. We got an inside candle, a decent step down. It is not great here looking on Apple. To the downside, you got 182.37, but realistically, you would expect this to follow through pretty significantly. 21 EMA sitting all the way down at 176.17. I do have a level there at 176.15 as well. Lots of confluence in that area. That still would be a higher low setup from this previous low, meaning that Apple should still be bullish in structure, but just extended here in the short term, similar to everything else we've been talking about. Looking at Tesla, we broke out of this wedge formation, pushed up today. We also just barely took out these candle closes on the 4-hour chart. We're up a little bit more after hours. 232.57 is your potential level to the upside. Pretty big move actually from this most recent low down around 194, then all the way back up to 224 in just a couple of days. So Tesla is still having a lot of volatility. You could argue this is maybe a left shoulder head, right shoulder, very messy in terms of structure. But if this breaks out here and holds above this neckline, got the 144 sitting right behind that level we talked about, and the 200 sitting at 241.22. As another potential price target. Does look a little bit bullish going into tomorrow on Tesla. Moving over to NVIDIA and Microsoft. I've been talking about these in almost every video for a little bit now, but these have been the biggest drivers in my opinion behind Tesla and Apple. So NVIDIA posting another bullish day, about 0.5%, tested my level 187.98, could not get above it. Interesting. Momentum still stepping up every day here, so still bullish in structure. RSI not overbought yet. Talked about how I expected a test of this next higher level at 197.54. I still think that is possible. NVIDIA can move a lot in just a day or so, and that would not be a big move to get up to that level. And that is a much more visible pivot point than this kind of neckline that I was watching. It is respecting it. You can see it on the wick. But ultimately, I would expect a test of that higher level before we get any kind of reversal, which I still think is going to happen to some extent on NVIDIA. And then looking at Microsoft, this is not necessarily what you would want to see from Microsoft. You can see we took out that previous high, made an all-time high, close up around 369.85. And then we gap down, inside candle, momentum stepping down, everything you would not want to see, potentially looking for that deeper pullback on the daily chart. 21 EMA sitting all the way at 343.38. I do have a level right here at 344.86, right at that pivot point there. So definitely interesting on Microsoft. If Microsoft starts to pull back along with Apple, that's probably going to send markets a little bit lower, in my opinion. Moving over to staples and discretionaries. Both of these looked pretty good on the day. Interesting. Discretionaries, staples stepping into bullish territory on momentum. got a first test of the 200 SMA. Again, first tests typically are not successful, so we could see a little bit of a pullback here, but if it pushes right through it, that could be a bullish indicator up to that 70.85 level. Give you about another $1.50 in potential profits on that move. We also pushed above the SMA on RSI. Very nice. Everything looking pretty good on staples after hitting that 66 level, which was a very dramatic down move over several months to get to that level. Now we're starting to see a little bit of strength and stability coming into price. Discretionaries, another bullish day. We had our first test of the 200, pulled back. Second test, we got above it on a closing candle on that 7 o'clock, and then on the 11 o'clock candle, we did close below it, which is not great, but we are above my level at 162, up by just 8 cents there above that level. As long as that holds, should be in good shape up to 166.78. But really you want to see it get above that 200, hold that level, and then you can trade off of that to the next potential upside. And overall, it looks like we have a solid base, dip low, triggered lots of buyers, clear divergence on that rally, makes sense, testing a critical level. And if this breaks here, should be a nice opportunity for some bullish price action. Moving over to transports and oil and gas on the daily chart. Transports showing a very similar structure to everything else. Slightly bearish day, down 0.1% after a gap down, wick to the 9. And then ended up holding in that same zone. Very interesting. Indecision candle. Want to see it get above that current price. You can see these previous lows acting as resistance. I don't have a level there. Might be worth paying attention to. Price is clearly reacting to that level. And this might be the stall out, pull back, higher low setup, bigger rally. That could be interesting as well, which would fit with the rest of the thesis. But again, if it breaks this level, then you're looking at the next level, 234.11, and then some trend resistance potentially around 232.20. Moving over to oil and gas, this is starting to show some strength here. We talked about the 200 acting as support, 135.07. We didn't officially test that level like we did here on this previous dip low before we had a nice rally off of that level. But now, candle down, very close, wick that level on Friday, momentum stepping towards bullish. Bullish candle here, not quite 1%, but looks good. And if oil and gas starts to show some strength in tomorrow's session, this could be a nice little opportunity up to that 146 area. Moving over to breadth on the 50 and the 200-day averages on the daily chart. Breadth continues to step down in momentum. Basically nothing happening here. Slight bullish day on the 200, but below the 50 EMA 50-day average, sitting on that 200 and the 144 consolidated at that level. Overall, I still think a test of the 21 and 55 EMAs on the 50-day average makes sense. Get that little bit bigger pullback, get us down to that 430 level for the end of the week on the SPY, which would correlate pretty closely with the 29.39 level on the 200. Hold that level as a higher low on this chart, and then we could see a bigger push off to the races into that 76 area. Very similar to this move that we saw here. Came down, tested that level, rallied through. A little bit different in the fact that we dipped much lower, rallied through, retest, and then bigger push higher. I still think both of those are feasible here to the upside, just being patient for that inflation data. Moving over to the dollar on the hour and the daily. Dollar throwing a big wick, falling throughout the session. Still holding that 144 EMA on the hourly chart. Not great. But if we can break that, get below all the EMAs on the hourly, that would be interesting. Give us a little bit more bearish thesis in the short term. You can see that here on the daily chart, 2 bearish candles in a row. 21 EMA on the daily chart holding as resistance, and that is what I'm looking at right now, 106.06 as that zone. Want to see it get below 105.50. We did get below it once, then we rallied back through. If we break down again, should be looking for that lower low all the way down to 104, which should be bullish for equities. Moving over to the daily chart on JNK and TLT. JNK selling off again, 0.18%. Still holding above the 55, so you could argue this is still a flag type setup. Rally up, flag, hold this zone, rally up again. 21 in VWAP, similar to everything else, sitting just below that in the 89.50 area. Moving over to TLT, again, bearish candle, just a little bit. Ended up holding above the 9 EMA, which is interesting on the daily chart. Momentum still fading, RSI still doesn't look great. Tiny little bit of volume on both of these here for today's price action, so not a ton of weight behind it. It looks like bonds are really just waiting for the inflation data tomorrow. Moving over to volatility. Volatility continues to show strength here, so move index going up much higher. Makes sense. Bonds moving into inflation data could have some volatility with yields potentially going higher on hot inflation. Momentum on both of these stepping towards bullish. VIX also showing strength. multiple days of consolidation in this same zone, right at that 1490 level. It is still technically below it, and we've been below it for a couple of days now. But again, showing a little bit of strength. We had a slight update on Thursday last week, fell on Friday, slight update here today. It does seem like we're waiting for at least one more push to the upside on volatility. Moving over to my accounts, I did fine on the day. You can see I was up about $130, something like that. So pretty good. IWM didn't move at all, so made just a few dollars on that position. And then here on my covered calls, I did roll this 377 down to 376. And I also pulled that in one day, so that's good as well. Now I'm only 2 days out on that position for $2.57 credit. So a little bit less credit, took in those profits there, which gives me a max profit on this position at 378.57. And really, I would like to be out of these shares. I don't want to be in 400 shares typically. That is bigger than my core position, but markets were so aggressive. I wanted to get a little bit of opportunity there. And this is about as much risk as I want to assume here. 400 shares on the NASDAQ is pretty heavy, even with some in-the-money covered calls, trying to give myself a little bit of potential to the upside. Overall, not bad with the NASDAQ being down about 0.3% and making about $100 on the day. In terms of thesis, obviously inflation is going to drive markets, but I do think we are exhausted on this move. Basically the same principles I've been talking about for a few days now, especially with the candle here today reinforcing that it looks like we're exhausted, looking for a little bit of downside into that max pain finish for the week. Let me know down in the comments section what you think of the upcoming potential government shutdown. Will they figure it out? Will it be another stopgap? Or maybe a potential long-term solution? Probably not, but otherwise it's fun to think about. Like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.